Also ahead, fresh data reveals another massive surge in Melbourne and Sydney house prices. Melbourne property prices have surged in the past month, pushing ahead of Sydney for growth in the last quarter. The property market in Australia's two biggest cities is currently dominated by investors, currently making up to 60% of buyers. Ben Kingsley is Chair of Property Investment Professionals Australia. He joins me now from Melbourne. Ben, thanks so much for your time this evening. We're constantly hearing about gains in Sydney's house prices. This time around, it's Melbourne that's recorded the biggest price surge over the last quarter. Why is this?
Look, Melbourne's had a good winter so far. There's obviously a shortage of stock that's coming online, and it's a very livable city. So, you know, the economic conditions are okay down here, interest rates are low, and I still think it's a momentum of a lot of buyers who fear of missing out in getting into the market at the moment. There's no doubt there is some investment activity happening down here, but it's nothing compared to what we're seeing in the Sydney market. So Sydney's recorded some significant growth, and we're starting to see that slow a little bit, but Melbourne is basically playing a little bit of catch up.
Now, rental yields, on the other hand, they're sitting at record lows in both Sydney and Melbourne. Is this purely because these are the cities where investors are most active?
It is, but it's also a statement of when values grow quickly, what actually happens is it takes a while for rents to pick up. So there's no direct correlation between quick increases in value and then obviously seeing yields grow further. So it's not so much of, you know, everything happening at the same time, it's just a lagging effect. So when we see capital growth slow down, we're going to see rental yields improve.
So for people thinking about buying in either Melbourne or Sydney at the moment, what would be your advice? Buy now or hold on to your money and invest a little later?
It's a great question, Catherine. I think really in terms of Sydney, I think we've reached, you know, fair market value. There's certain types of accommodation in terms of property that I wouldn't be looking at, medium and high density apartments, and then also some of the new greenfield estates where we're seeing house and land packages. We see the value in those areas being quite fully priced, and I think there could be a risk of seeing a correction in those particular markets if we continue to see strong growth in those areas. So if I was in Sydney, I'd be very careful if I'm looking at detached housing in the right location with a really strong livability, and I'm taking a long-term view. Well, ultimately, I think it's a sensible time to invest in property or to buy your owner-occupied home if you take that view. But we know from 2001 to 2003, when we saw the last upward cycle, and we're talking about a very heated cycle in that time, that we saw a lot of correction coming out of all of the properties once we basically got over that sort of peak in the market. So I do expect once there's a lot of supply coming on, especially in the high density and medium density apartments in both Melbourne and Sydney, that we'll see a correction in those particular prices in those areas.
And Ben, just briefly turning to the rest of the country now, other capital cities are experiencing a pretty soggy property market. Do you expect listings and also buyer demand to pick up come spring?
We do, and it's a natural progression. So our two big international cities, Sydney and Melbourne, certainly are the growth drivers in this country. So what we see is usually Brisbane and Adelaide and the like come to the party later. We certainly know in terms of Perth that we're seeing, you know, the mining capex expenditure is slowing down. So we're seeing the sentiment shift in that market. Job security is not there. So we're seeing that market actually showing declines in property values. Back on the Brisbane story, I think it is, as I said, they're latecomers to the party. So we're just starting to see the uplift in the Brisbane market. We certainly know there's been some really good growth in detached housing close into the city. We're a little worried about the supply side, and when it comes to the unit market, there's going to be a lot of supply coming online over the next couple of years. So that's something to be very careful. Try and focus on maybe small or boutique apartments as opposed to focusing on the big sort of high-rise, high-density type accommodation. Adelaide's going to be another story of affordability as people make a decision around their lifestyle. Do they want to be in the hectic cities and the big cities and live, you know, an hour and a half from their job opportunities because of obviously the population and congestion? Will they then decide to relocate and make a family decision where affordability is a little bit cheaper? So we do expect Adelaide and we do expect Brisbane to have that story coming through in the next couple of years.
Okay, Ben Kingsley from the Property Investment Professionals Australia, thanks so much for your time this evening.
Thanks, Catherine.